This is Ken Jacobson. I'm a senior mortgage planner and a loan officer with Home Trust Mortgage. This is your mortgage market update for the week of December 15th to today, the 19th. Houston, we finally got something that buyers have been waiting for a long time, meaningfully lower inflation. The market reacted positively. The latest inflation report showed inflation was cooler than expected. More importantly, core inflation was slower. What really matters for housing is that shelter inflation is finally easing. That's a big deal because shelter inflation has been one of the biggest drivers keeping inflation elevated. Markets responded immediately. Bonds rallied, which is typically supportive for lower mortgage rates. This gives the Fed more confidence that inflation is moving back toward their target, and that makes buyers watching rates closely more confident to move forward. The job market reinforced that trend. Jobs data from the government look mixed on the surface, but when you dig deeper, you see that recent job growth has been lower than expected. Earlier months were revised lower, and the unemployment rate has been moving up slowly, creeping higher for several months in a row. We're seeing more people working part-time jobs, holding multiple jobs. This isn't an economy that's overheating, it's an economy that's slowing. For housing, that matters because a softer labor market reduces upward pressure on interest rates, reinforcing the impact of that cooler inflation. Mortgage rates are steadier and lower. Mortgage rates remained relatively stable last week, but while not currently at their lowest levels that we've seen, they're averaging the lowest level over the past 3 months since 2022. Buyer behavior reflects that. Activity naturally slows in December because of Christmas, but purchase demand is still stronger than a year ago, and refinances are back. This tells us buyers are responding to improved affordability even in a slower season. Buyer confidence edged higher again in December. It's still cautious, but this is the third straight month of improvement. In a market like Houston, where new construction plays a big role, that matters. Builders don't turn more optimistic unless traffic improves and conditions stabilize. This lines up with what we're seeing locally: steady demand, realistic pricing, and fewer extremes. Existing home sales, closings on existing homes rose in November and were pretty close to estimates. Also, there was a positive revision to October. What this means for Houston right now: Houston continues to stand out as one of the more balanced major markets. Prices are holding rather than swinging. Inventory is higher than it's been in years. Buyers have time to think, negotiate, and be selective. Sellers who price correctly are still seeing activity, a lot of activity. It's not a boom market. It's not a distress market. It's a market that's finding its footing. Move now. Rates are lower. Buy your home. Thanks for watching. Have a great day, a great weekend, and God bless you. Oh, Merry Christmas, Happy Hanukkah. Catch me next week. Be safe out there.